Right, double A F8 examiner's report. Very important document before going for the examination, as you should know what mistakes to avoid, what previous candidates did in their exams, which caused them a paper, and you should not be repeating it again. Or if you are doing it first time, you should not do this. You should avoid it. Okay, so you must watch this video completely. Okay, and if you have any questions, uh, you can contact me on the WhatsApp. That is +9203021777706. Okay, so let's start with it and straight away. These are the general comments. Let's avoid it. And here it is, section A. Uh, Question one of the is it is 1st July 2005. You are an audit supervisor for an and Co. working on the audit of Jove and Co. The audit for the year ended 31st March 2005 is at the completion stage, and the auditor report is due to be signed next week. Draft profit before taxes 1.6 million misstatements during the audit. The following statements were discovered and recorded in the schedule of incorrected misstatements. Purchases, okay. Allowance for receivables, depreciation. We have errors were found when testing a statistical sample of purchase invoices. When extrapolated, this resulted in a total estimated misstatement of 18,400. The audit processes for the recoverability of the receivables indicate that an additional allowance for receivables of $124,000 is required. Calculation error has resulted in depreciation for the year being overstated by 114,000. The finance director has refused to adjust the misstatements in the XI financial statements. Now the analytical procedures. All of the ratios calculated when performing final analytical procedures were consistent, okay, with the results of the audit work performed, and except for the current ratio, which has increased from 1.3 at 31st March to 1.8. Legal claim when undertaking audit completion work. It was discovered that a customer has taken a legal action against Jovian Co. The customer claims that during 2005, Jovian Co. supplied detective materials and is claiming 100,000 from the company. Jovian Co. directors have included a detailed note in the financial statements explaining the issue and the amounts involved. The claim is not due to be settled by the court until after the auditor's report has been signed. Question 1. Which of the following procedures must be undertaken as part of the overall review of the financial statement of Jovian Company? Perform test of controls on Jovian Company procedures for identifying subsequent events. Perform a detailed review of the audit working papers to ensure the audit work has been properly performed. Reasons materially to confirm it remains appropriate in the context of Jovian's company final financial statements. Reevaluate compliance with ACCA Code of Ethics and Conduct in relation to auditors' independence. So the answer is C. Okay. The other options would be performed at the completion stage of the audit, not as a part of overall review of the financial statements. Now the question two is indicate by clicking on relevant boxes in the table below whether each of the following elements, statements relating the misstatements identified by the auditor is true or false. The auditor must communicate with those charged with governance of the Jovian company uncorrected misstatements and the effect they will have on the audit opinion. It's true. Okay. Next is the auditor must accumulate misstatements identified during the audit. Okay, except those which are clearly trivial. Again, it is true. And the summary of the uncorrected misstatement must be included with the written representation from the management. Again, it is true. All are true. Okay. So again. Candidates should not assume that answers will be a mix of true and false in all questions of this type. Okay. In this question, all statements were true. Candidates need to be confident with their knowledge and not second guess themselves. Okay. Question three. Which of the following statement is true in relation to the uncorrected misstatements number one, two, and three for the auditor to issue an unmodified opinion? Misstatement one must be adjusted for it based on the result of the statistical sample and may be indicative of their larger misstatement. Misstatement two and three do not need to be adjusted for as the net effect of this misstatement is not material. Misstatement two and three must be adjusted as they are individually material. The misstatement 1, 2, and 3 must be adjusted for as they are identified during the audit. The correct answer is C. Okay. In accordance with IS 45, evaluation of material misstatements uh, identified during the audit by misstatements which are individually material cannot be offset by other misstatements. Therefore, to avoid a modified opinion being issued, misstatements 2 and 3 must be adjusted. Now, the next question is indicate by clicking on the relevant boxes in the table below whether each of the following suggested provide valid or not valid explanations for the increase in the current ratio. So the allowance for inventory has been increased compared to the prior year. It's not valid. Okay. And the overdraft balance significantly decreased during the year as the Jovian Co. took out a longer term loan. It's valid. Okay. Now, why? So, statement one is not valid. Increasing the allowance for inventory will reduce inventory, and therefore current assets therefore would cause them current ratio to decrease rather than increase. Statement two is valid if the overdraft is converted to long-term loan. Current liabilities will decrease with no effects on current asset. Therefore, the current ratio would increase. Next question. All issues identified in the schedule of the uncorrected misstatement have now been resolved. The audit evidence obtained confirms that it is possible but not probable that the legal claim will be successful. Legal claim is not fundamental to the user's understanding of the financial statement. So identify the type of audit opinion which should be given and where if all matter should be disclosed in the auditor's report, as you can see over here. So although the material matter is material, it has been, you know, correctly disclosed in the financial statement as it is not fundamental to the users. Understanding no additional disclosure should be made in the auditor's report. The opinion will be unmodified with no related disclosure. Section B, Pimeto Company, 30 mark question based on which is a retailer of food and household items with a large network of stores across the. This question tests candidate knowledge of auditor's responsibility for fraud and error, audit risk, audit responses, successive procedures, trade discounts, receivables, ethical threats, and safeguards. So explain the responsibilities of Corando and Co. IS 40, 240, auditors' responsibilities related to fraud and audit of financial statement. So the importance of having a detailed understanding of ISAs in the case ISA 240, auditor's responsibility relating to fraud in an audited financial statement. It is relatively straightforward knowledge requirement which has been tested in previous exam sessions and candidates should be aiming to score full marks. Okay. 1 mark was available for each well explained point. Therefore, candidates should have provided four well explained points. It is important to ensure that the points are fully explained as it was common to see candidates only gaining half a mark. Why? Rather than 1 mark, for example, simply stating the auditor has to obtain reasonable assurance that the financial statement are free from material misstatement is awarded half mark. To gain the other half mark, the answers need to add whether caused by fraud or error or what so. See, that's what I do when I drafting the answers for you guys in my classes. Those who are attending my classes are an advantage. Anyways, uh, care should be taken when reading this requirement to ensure that focus on the right issue. For example, some candidates incorrectly focus their answers on management responsibilities despite the requirement only relating to the responsibilities of auditors. In addition, some candidates listed procedures the auditor should adopt when meeting their fraud responsibilities are provided loss of points. The auditor should consider when reporting on the potential fraud, such as whether was in public interest. There are not responsibilities in the rise of 240 did not gain credit. Can, candidate must take time to carefully read and identify keywords in the requirement to ensure their answers are relevant or is relevant. Okay. Big requirement, 16 marks. Describe 8 auditors and responses to each risk in planning the audit of payment to company. That means 1 mark for audit risk, 1 mark for audit response. Total 8. Okay. Marks are awarded for identification of audit risk, half mark each explanation of audit risk, half mark and an appropriate auditor's response to each risk, 1 mark each with the scenario based requirements such as this good exam technique is critical. Half mark for explanation, half mark to connect it with the scenario, and 1 mark, half mark for 1 mark for response. Okay. The scenario will typically contain more than number of risks required, so it is important that candidates plan their time carefully and only attempt the list the required number of points. The first is to identify the factors which will give rise to an audit risk. The information can be found in the scenario. The information in the scenario should be read carefully, including opening paragraph. This may include information relevant to the identification of audit risks. When understanding this, read to a good exam technique to use the highlight function as this provide a visual aid for quickly spotting audit risks. That's I always encourage to do in my classes, and I do it myself. Having looking at the whole scenario and highlighted relevant points, candidates should pick their 8 strongest points, reread them from the scenario, drafting their answer as they go along. Candidates often use the copy and paste function when drafting answers for the identification of the risk. However, care should be taken to ensure that the risk is actually identified. Simply stating a fact from the scenario is not always the same as identifying the audit risk. Remember it. Financial accounting knowledge is also important as auditors will focus on the accounting treatment used in the financial statements in prime. Time into company accounting issues which give rise to audit risks include those relating to inventory valuation, property, plant, and equipment, and bonus issue of shares. Hence, a strong knowledge of relevant accounting standards is required to adequately explain, provide a relevant response, auditor's response. Candidates should expect a range of topic areas with an audit scenario, some of which may be more challenging than others. In this scenario, it was pleasure to see candidates were able to confidently identify a good cross section of the risk. However, there was a significant minority of candidates who incorrectly identify audit risk that internal audit department may visit stores every 24 months. This is not a risk that our auditor would be concerned with. Okay, that's the company's matter. Having identified the risk factor, the next step is to explain the risk. To do this, need to state the specific area of financial statements impacted with an assertion, for example, cut-off, valuation, etc. Or over under misstatement, reference to inherent control detection risk. Misstated will only be awarded if it is clear that balance could be either over or understated. It is a clearly a risk of understatement. Then no credit would be awarded if candidates refer to the risk. The balance could be misstated. Candidates cannot hedge their bets by providing both options. Okay. So the explanation of the risk must also clear state that the specific area of the financial statements impacted, for example, in response of the issue relating to the loss of on disposal. Only noting that the current assets of assets could be overstated would not be awarded credit. An appropriate explanation in the instance would be the property, plant, and equipment could be overstated. In addition, stating the expense could be understated would not earn credit, as this is specifically the depreciation expense that would be understated. In addition, some risk explanations were inappropriate. For example, risk relating to reliance on the audit, internal audit. Few candidates correctly explained there was a detection risk if the work undertaken by internal audit was irrelevant or poorly performed. For the risk relating to the operating of the distribution of depot facilities. Some candidates incorrectly believe. "Hmm, So for the risk relation to the inventory valuation methodology, many candidates incorrectly focus on how inventory should be valued at the lower of cost rather than whether the methodology adopted close approximation to the cost as permitted ISO inventories. For the risk relating to the bonus issue of shares, some candidates incorrectly believe that as a dividend was not being paid, this must mean a going concern risk. This is not the case, and so no credit was awarded. Candidate must take the time to carefully read the scenario, noting any relevant information to ensure that they correctly understand and describe audit risk arising. Having identified and explained the risk, the next step is to provide the auditor's response. Response must be practical within the context of the scenario, and care should be taken to ensure the response is one an auditor would make and not a management response. Candidates are advised to take a moment to read their response and ensure that what they are suggesting will help the auditor to form a conclusion on the identified audit risk. So, in this session, some candidates struggle to produce valid audit responses for risk relating to the loss on disposal, candidate focus, whether the asset disposed of and be removed, rather than whether the loss was a result of an appropriate appraisal policy. A significantly minority of candidates gave journal statements, required accounting treatment. For example, inventory valuation risk, it was common to see inventory should be valued at lower of cost and NRV rather than how the auditor would test whether the valuation method adopted was a close approximation to cost. The journal statement approach indicate a lack of practice in the tackling different risk and responses question from previous exams. Candidates often suggested increased professional skepticism for a whole range of audit risks. While valid, it is not a suitable auditor's response for 1 mark. This is because increasing scenario skepticism does not on its own help the auditor to gain suitable audit evidence over the identified audit risk. Okay, the for the fraud discovered in the financial department, simply stating increased professional skepticism will only gain half mark. To gain the full mark, candidates need to focus on additional substantive testing of the affected areas or the discussion with management. Okay, the fraud and the procedures adopted identify all potential adjustments. The delay in processing accounting record was only the other risk in which gain. Okay, the risk identified contains sufficient detail. A response of discuss with management will not gain any credit. Need to be very clear exactly what they are asking management about. Where further documentary evidence is required, candidates need to refer to this gain the one available marker response. Also, consideration should be given to the reliability of the audit evidence. For example, evidence gained by a confirmation from a third party, such as lawyers, will be more reliable than verbal representations from management. Further, candidates are advised audit risk is and will continue to be an important element in the syllabus. Must be understood. Candidates must ensure they include adequate question practice as part of their revision on this key topic. Good scenario based audit questions to practice from. See, Here is the question which examiner just suggested to practice. All are available at my end, by the way. Now, question 4C. Describe substantive procedure auditor should perform to obtain sufficient appropriate evidence to trade discounts. Receivables for payment to company at 31st August 2005. One mark is available for each well described per procedure. Therefore, candidates should aim to produce four tests of their requirement. Candidates should plan their time accordingly. Many candidates fail to score well in this type of requirement because their procedures are vague or too brief. Tests must be sufficiently detailed, not clearly which source document should be used and the evidence it will provide. And see, many tutors out there say that this is enough. So candidates must ensure that they can distinguish between a substantive procedure and a test of control. Another thing I always say, okay, candidates lose marks by giving tests of control when the requirement specifies substantive procedures. When tackling a substantive procedure question on an unfamiliar balance, it is important to consider the first principle in the balance or asset or accounting treatment governed by accounting standard. Receivable will be used, received post year end, and therefore this can be tested. The discount from a supplier is determined by the volume of goods purchased in a year, presumably is based on a percentage sum formula. Therefore, the discount should be calculated the volume of purchases with their supplier to be purchased listing. I haven't taken this. This is all very important. Okay. That is okay. That is the discount from a supplier is determined by the volume of goods purchased in a year, presumably is based on a percentage or some formula. Therefore, the discount should be recalculated and the volume of purchases with the supplier agreed to the purchase listing. Having taken this first principal approach, an appropriate number of substantive procedures to pass question can be generated. Candidates who focus on recalculating the trade discount receivables and agreeing to the trial balance, analytical review, prior year budget, agreeing the payment of the discount to the post year and bank ledger discount supplier corresponding were able to gain credit. When generating substantive procedures, it is possible to ensure that the tests have sufficient detail, are clear, for example, aging, the payment of the discount post year end without specify what are the payment is being agreed to gain the available one mark. It is important to stress that there are the source document is the post year and statement bank, that is statement of bank ledger account. In this session, a significant proportion of candidates incorrectly provided trade receivables procedures such as reviewing the receivables allowance. The requirement was for a trade discount receivable, but it seemed that candidates ignored word. Be careful, guys. Be careful. That's why the passing rate of this paper is not too good. It's went down. Okay. Section D, D part C marks identify and explain three ethical threats, audit of Panto, and for each threat, recommend an appropriate safeguard to reduce the threat to an acceptable level. I'm sure it was well performed. So, for ethical and safeguard questions, generally asked to identify, explain a set number of ethical threat from a given scenario. Okay, candidates are awarded half mark for identifying ethical threat, half mark for explaining the implication of the threat. Candidates are awarded one mark for each well explained safeguard. To be awarded for the identification, the auditors are required to, candidates are required to identify the issue from the scenario and correctly state which type of ethical threat is. Both elements must be provided to another half mark. For example, simply identify the audit manager is considering including an audit assistant who is the daughter of the finance director of Pimeto company, is an audit is not sufficient. See, the candidates need also state this is a self-interest or familiarity or intimidation threat or whatever it is. So the threat arising from the request by the finance director about the Iberico going concern statement was incorrectly identified as an adverse AAC threat rather than intimidation or confidentiality threat. What are you doing, guys? The next step is to clearly explain the implication of the threat. Candidates often fail to do this. Seriously? And you guys do self study. You think you are a pro. Okay. The explanations need to be clear as this why this is an ethical issue. For example, just stating this will impact the auditor's independence would not be awarded credit. Candidate must explain how independence will be impacted. For example, self-interest set arising from the contingent fee could cause the audit team to ignore audit. Adjustment which will reduce the profit for a self review threat relating to the provision of the accounting and bookkeeping services may candidate. Many candidates identified self-reviews rather than explaining the auditor may less likely to challenge their own work or identify potential errors. The final step is then suggest a safeguard and is important. This is phrased as an action. Often candidates provide objectives rather than an action. For example, threat relating to audit fees being based on level of premium to company final profit. A safeguard of contingent fees are not allowed, will not be awarded credit. Okay. The, again, one mark available. The safeguard must give a clear action. For example, the audit firm should inform payment topo that they cannot agree to the proposed fee basis and that the audit fee will be based on the level of work undertaken. Additionally, safeguard must be practical. Consistently recommending the audit firm should resign is unlikely to be a sensible safeguard. While resignation would remove the ethical threat, it would also result in the loss of work. Every potential ethical threat was resolved. Resigning, the audit firm would have no clients left. Okay, okay, okay. Seriously. So Harper Company 20 mark question based on Harper, which is a home furnishing retailer, 20 stores across the country. Okay. 4 marks requirement describe two advantages and disadvantages to Hyper Company of outsourcing its internally audit function. Very easy. 4 marks in plate for you guys. So candidates were required to describe two advantages and two disadvantages of Harper Company. Outsourcing existing internal audit function. As the verb in the requirement was described, candidates need to ensure they write enough detail in their answers. Simply providing a few words such as cost saving is not enough for description. Candidates therefore need to consider when reviewing their answers whether they have written enough. When tackling this requirement, it is important that candidates only consider advantages and disadvantages from the company's perspective, on which we consider the impact on the outsourced service providers, such as the audit firm, will not gain any credit. In addition, requirement is for advantage. Therefore, where the points are made for say advantages, then all three will be previewed, but marks only be awarded for the best 2 points. Candidates are therefore reminded to spend time carefully reading the requirement to ensure that any keywords, such as those in capitals, are fully understood. Commonly awarded points for advantages, including gaining access to specialist skills and possible cost saving if there are fees less than the employment training cost of the employee. For disadvantages, points are awarded for the redundancies and the potential impact on morale and productivity, loss of in-house skills, which may be difficult to bring back in the future if required. Higher it was very common to see incorrect disadvantages, loss of confidential information, and the outsourced provider may lack business industry knowledge. These 2 points did not earn any mark. Just because the service is outsourced does not mean that there will be a risk to confidential information. The service provider is likely to have the necessary business industry knowledge. It is knowledge of the company's internal control system that will be lacking initially. Last requirement 16 marks. Identify and explain 8 deficiencies in Harper's system of internal control. Provided a control recommendations to address of these or deficiencies. I'm sure a lot of mistakes were done. Marks are awarded for identification of deficiencies, half mark. Okay. Implication of the deficiency of the half mark and an appropriate control recommendation to address each deficiency, 1 mark. Each. The first step is tackling deficiencies is to read through the whole scenario in full. This gives an understanding of what the potential answer points are. Some deficiencies are easier to explain than others. Having look at the whole scenario, candidates should read it, drafting their answer as they go along. Do not be daunted by the length of the scenario. Be methodologic and stay focused. In a multi cycle questions such as Harper, there is this likely to a good cross section of the points across each of the 3 cycles presented, and the 8 deficiencies are required. In identifying deficiencies, candidates often copy and paste from the scenario but fail to spot deficiencies. In Harper Company, some candidates identified irrelevant deficiencies, now such as C. Sales are gathered by member of Harper Company sales team visiting corporate customers premises. There is nothing wrong with sales representing visiting customers. Who will visit them? Finance officer or the CFO? Obviously, it's their job. Customers pay in cash. The company is a retailer, and therefore, some customer will always pay in cash. What's wrong in it? It's not a deficiency. Purchase orders are raised without checking the inventory levels. The scenario stated that the approved requisitions were received as part of the ordering process. There was no indication in the scenario that inventory levels had not been checked as part of the approving these requisitions. Candidate should not assume this is a deficiency. There is some indication in the scenario. Okay. The least common provided deficiency related to the good received by the warehouse only being checked to the supplier's delivery note. In this case, the deficiency had to be identified based on what was not being described in the scenario. Deficiency is the act that the goods are only checked against the supplier's delivery note, not to purchase order. Therefore, the company could take delivery for good order. Having identified deficiencies, candidates are required to explain the implications to the business. Okay. The explanations need to be specific to each deficiency, as it is not sufficient to state this will result in fraud or error, or all deficiencies can lead to increase, decrease, fraud, and error. A clear understanding of how the deficiency will result in fraud and error is needed. This session, it was apparent that some deficiencies were misunderstood by candidates. For that efficiency of credit checks not always being performed, not for all customers, a significant proportion of candidates refer to a loss of revenue or customers' goodwill. To gain the explanation mark, it was important to understand that if credit checks were not performed, then salesmen may be made to credit worthy customers, resulting in irrecoverable receivables. Okay. Also, for the deficiency of the daily sales report being reconciled to cash credit received once a week, many candidates did not even provide an explanation as to why this was a deficiency. The deficiency relating to the payroll calculation not being checked to provide problematic for some candidates to gain a half mark available. To state the system errors may arise may be misstated without referring to the statement errors would result in credit not being awarded, as the explanation must be complete. The next part of the requirement is the candidates to describe control recommendations. To gain the 1 mark available in the impulsive, that the descriptions of the recommendations are detailed. Enough additionally recommendations must be actions rather than just objectives. Recommendations which are phrased as ensures that are unlikely to gain much credit. Okay. Candidates need to ensure that recommendations are well described, clearly address the specific control deficiency identified, and practical suggestions. Also, it is important that recommendations are complete as possible for the deficiency that the purchasing department does not have to gain GRNs. The recommendation to give the purchasing department access to the GRNs would only gain half mark. The recommendation needs to also state that the purchasing department should match GRNs to order or follow multiple fulfilled order, as this is why the purchasing department need to be able to view the GRNs for the deficiency that the payables clerk only uses document could not control when inputting invoices. A significant proportion of the candidates focusing their recommendations on the seniority of clerk recommended that a senior member team inputs invoices are each invoice is checked, another check. These recommendations are impractical and were not awarded credit. See, the issue here is that input checks need to address completeness and accuracy, and count controls will only address completeness. Okay, still. So then some candidates incorrectly provide tests of controls, even substantive rather than control recommendations. Good questions to practice. Here it is. Then Everest and Co. Last question based on an audit firm to commence audit of an existing client which manufacture garden furniture, blah blah blah. Time allocation could be based on 1.8 per marks. I think there is a time issue in it. Okay, so therefore the available time should be split at 11 minutes for requirement. Okay, candidate must try to understand substantive procedures and apply good exam technique. This includes tailoring procedures to specific requirements. Again, requirement without consideration of their relevance to the scenario provided this approach to be generate 2 marks. Okay. Audit procedure must be sufficient detail. For example, review disclosure would only score half mark. To score a full mark, the procedure should go on to say in accordance with according standards relevant legislation. Okay. So in part A describes the sensitive procedures the auditor should perform to obtain sufficient and appropriate audit evidence in relation to the matters identified regarding average scores, the property, plant, and equipment. Okay, now the described substantive procedures the auditor should perform to obtain sufficient and appropriate audit evidence in relation to the matters identified regarding average company property, plant, and equipment. So this scenario for this requirement stated that an earthquake occurred near the site of one of the company's three factories. The factories was significantly damaged, but all other properties and inventory were unaffected. 0.8 million had been spent on the repairing the factory, of which some were recognized within PPE. The company was also incurred asset expenditure on the purchase of the new plant and equipment to replace assets which are were damaged and were therefore scrapped. So it is important to consider the issues in the scenario and compare this to the question requirement. Question requirement can sometimes focus on specific assertions such as valuation or completeness, or on a particular element of accounting balance such as just revaluations. Where this is the case, care must be taken to ensure that the answers only relate to this assertion or account element. Spending time understanding the issue and carefully reading the question requirement ensures that procedures given are tailored and more likely to score marks. The requirement was only in relation to matters identified regarding average score PPE. Therefore, general PPE procedures would not gain credit. Okay, see this. Okay, the scenario contained details of the cost of repairing the damaged factory, of which only some expenditure had been included in PPE. Therefore, remainder must have been expense as repairs and maintenance. Within the statement of profit or loss for plant and equipment, there were additional as well as disposal of scrapped assets. Candidates should have considered how to test each of these three elements of the scenario: treatment of the repair cost of the inventory, additions of plant and equipment disposal. Two substantive procedures should then have been generated to test each element. Procedures such as casting the additional and agreeing to the term to the non-current asset register, agreeing additions to invoices to ensure company name and correct value recognized, physically inspecting to the additions for existence, recalculating the depreciation expense for the correct time period, reviewing a breakdown of the zero point 0.8 million spent on repairing the factory, and agreeing to the invoices the zero point 0.5 million recognized as PPE was in fact PPE, and reviewing the disclosures for compliance with the relevant accounting standard would all gain credit. Okay, some candidates included procedures such as obtain written representation from management and review board minutes for authorization of the additions, of both of which did not gain credit. Requesting written representation should be restricted to areas where the auditor is relying on management judgment or where there is little independent evidence available. Reviewing the board minutes for authorization is a test of control rather than substantive procedure. Additionally, some candidates incurred the requirement to only provide procedures for the matters identified, listed generic PPEs, tests for evaluation. Significant minority also provided procedures for inventory. This is despite the scenario stating inventory was not damaged and the requirement only related to PPE. Candidate must carefully read the information in the question, tailor this answer accordingly so that tests fit with the requirement and scenario. Requirement B, O marks, describes substantive procedures the auditor should perform to obtain sufficient and appropriate evidence in relation to the matters identified regarding average co-current assets received. So, in common with Part A, it is important to carefully consider the requirement and review the scenario to understand the issues being described. In this case, scenario indicated that a claim had been submitted to insurance company for damage to PPE caused by the earthquake as well as for loss of profit. The scenario carefully stated current asset receivables had been included within the financial statement for the total claim of 1.8 million. So, as the requirement is of 4 marks, only four procedures were required, straightforward procedures, which gain credit in session, including reviewing correspondence with the insurance company for the status of the claim, reviewing the post year end, bank ledger, paid for payments received, aging to this financial statements, reviewing the board minutes to assess whether the directors believe insurance claim will be successful, obtain representation from management view to outcome of the claim, review the disclosure of the insurance claim is accordance with accounting standards. So, what were the incorrect procedures? Procedures relating to trade receivables. Insurance claim is not a trade receivable. No, contact the company's lawyer. This was an insurance claim, and so contacting lawyer is irrelevant. Seriously, guys, contact the company's insurance company. The insurance company will not respond a request from the audit firm as whether the claim will be paid. Candidates must ensure they practice generating successive procedures for different accounting balances. Good examples to practice are again, here are the recommendations of questions. Requirement C, content details of the overdraft facility on which the relies so heavily and renewal of the facility annually reviewed by the bank. The overdraft. Okay. Information to generate approval only credit would be awarded for procedures such as reviewing bank correspondence to assess the likelihood. overdraft facility, reviewing financial statements for the impact areas, assess whether, oh, so many procedures, by the way. Statement for the impact areas to assess whether the covenants are likely to be breached. Okay. Having considered procedures specific to the scenario, candidates listed standard going concern procedures, review of cash flow forecasts, and assumption for a reasonable review of board minutes, discussions on matter related to going concern, review of disclosures, and rather appropriateness in relation to going concern. Some candidates listed going concern indicates rather than procedure, and these were not awarded any credit. Hmm. Okay. In addition, number of procedures were too brief or vague, often not giving the source for the test, ensuring without explaining how the test would have been achieved. This, for example, contact the company's lawyer would not have gained any credit. However, the procedure should be contact the company's lawyers to inquire of any litigation and the likelihood. Okay. Discuss the issue and describe the impact on the auditor's report of average company of adequate and inadequate going concern disclosure. Okay. Now, so auditors' reports feature regularly in the double exam. Yeah, there are several ways in which they can be tested. Candidate must be prepared for any type of question. For this requirement, marks are awarded for discussion of the issue 1 mark, the impact on the auditor's report of the adequate disclosure 2 marks, and inadequate disclosures 2 marks. The first step is to identify the issue. The should be relatively straightforward, as will be provided in this case relates to whether going concern uncertainties relating to the renewal of the overdraft facility have been adequately disclosed in the financial statements. Okay, to award the mark for the discussion in the issue, candidates should not copy and paste the information from the question, but must explain the impact in the case. The issue is that renewal of the overdraft facility will be decided after auditor's report was has been signed. This is a material uncertainty, half mark, and the effect on the auditor's report depends on the adequacy of the disclosure, half mark. Many candidates still not attempt this part and therefore cannot be awarded the 1 mark available. So knowledge of ISA 570 going concern help in considering the next part of the requirement, which is the impact on the auditor's report on both adequate and inadequate disclosures. Answers should be clearly split into adequate and inadequate disclosure. This session, candidates structured their answer in this way, tended to generate more relevant answers, ensure that they consider both parts. Those who did not split the two possible outcomes often failed to consider adequate disclosure. It was difficult to see which points related to which outcomes, resulting in difficulties allocating marks. So, if the going concern issue has been adequately disclosed, then the auditor's report would contain an unmodified opinion, half mark. Financial statements are true and fair, half mark. To score well, candidates should consider any additional communication should be required in the report, auditor's report. Material uncertainty relating to going concern paragraph would be required. Half mark, which is close reference to the disclosure note in the financial statements. Half mark, a clear statement that auditor's opinion is not modified would also be necessary. Okay, inadequate disclosure of contingent liability will result in modification of the opinion, and therefore this part of this requirement is more typical of standard question on auditor's report. When considering the impact of the modification, answers must clearly state the type of opinion required, example qualified opinion, adverse, disclaimer, whatever it is, whether this is due to a material misstatement or due to an inability to obtain sufficient and appropriate audit evidence. In respect of average score, if the disclosure is inadequate, then there is a material mistake which is likely to be material, not pervasive, and therefore disqualified opinions is appropriate. It should also be remembered that a modified opinion will affect the basis for opinion paragraph. For example, it will include an explanation of why the opinion is modified, Now, when attempting question on auditor's report, it is important to ensure that the correct terminology is used. No credit is awarded for recommending an unmodified opinion, as it should be an unmodified opinion. Additionally, candidates should note that an examples of matter paragraph is not relevant for going concern uncertainties. So this session, a minority of candidates did not attempt this requirement. However, it is important that candidates adequately prepare themselves for questions related to all types of reports, audit reports, as well as any other part of syllabus area. Good examples to practice is Jasmine Company from September December 18 example. Okay, so that's what the examiner report saying, and I hope you will learn a lot from these auditors, examiners, recommendations, and all. If you have any questions, you can ask me on the given WhatsApp number. That's it for now. Take care. Bye bye.